I'm Charlotte McLeod with investingnews.com, and here today with me is Peter Krauth, publisher of Silver Stock Investor and author of The Great Silver Bull. Thank you so much for joining me. Great to have you online as always.
Charlotte, it's always a pleasure, and thanks for having me.
Of course. So we do have a lot of topics to go over today, but where I want to start is with the Silver Symposium. So you recently attended this event in Las Vegas, I believe. I didn't have a chance to go, so I'm curious to hear about your takeaways, anything that you would want investors to know about what happened there.
Sure. So, what really struck me, actually, I guess I would say the thing that stood out the most was there were a lot of attendees, just investors, retail investors who themselves showed up, went out of their way to go to Vegas, and were very intent on hearing and learning about what was going on in this market. And that was a bit of a surprise to me because the sentiment in general is I'm going to say weak if you follow these markets. And the sentiment that I got from these retail investors actually, I'm not going to say ecstatic. It was quite strong. They were nonetheless, despite the challenges in precious metals, they were very interested and seemed quite committed and understood that this was not a short game, that it's a long game, and that they need to understand how the market works, stay informed, participate, be ready, do their research now. And that gave me actually a fair bit of confidence in terms of the ability, I guess, of some of the of retail investors to be able to assess the markets and to gain and maintain exposure to something like precious metals, which is obviously quite a niche market if you look at investments in general.
Okay, very interesting. Although, out of all the commodities, I would say, silver does have a very dedicated following. So I think that makes sense to me that a good crowd would show up there. Okay, so good to get your thoughts on that sentiment in the industry. I want to also look at macro issues going on right now. And I think the main thing that people have on their minds at the moment is the war in the Middle East. So obviously that means a lot of things across, like, at a global level. But I'm hoping we can dial it down a little bit and talk about silver during times of war or conflict and the performance that we might see there.
Absolutely. So if you look at what's happened in just over the past week or so, obviously this conflict has erupted. It lit a fire, so to speak, under precious metals. Gold is up about was up about $120 per ounce, or about, say, 6% or so. Silver gained about $1.75 from 21 to about 22.75. So that's over 8%. But when people ask me what happens in these kinds of situations with precious metals, the answer from me, at least, is that it depends. Normally, the war premium will fade. And we saw that if you look back at what happened with when Russia walked into Ukraine about a year and a half ago. That was clearly what happened. Gold popped over $2,000. It was temporary. It dropped back within weeks or months down to about 1,800. Silver rallied above $25 at that point. Then it retraced to about $21. So unless the conflict escalates, I expect to see this premium somewhat dial back. We may already have seen the beginning of that right now. But as I say, if the conflict escalates, then we could see some of these premiums stay quite high. I think that and it makes sense if you think about why precious metals are acting like this. Typically, when a war like this erupts, unless it's a world war or some the end of the world in some way, markets get used to it. They get comfortable. They see that it's not, quote unquote, the end of the world. And so the attractiveness of the safe haven starts to fade somewhat. And so it's not surprising. It's not really a fundamental driver for demand for those metals. And that's why you'd expect to see that safe haven buying sort of start to lose its shine.
Right. I think that is typically what you do here when you have events like this. You get that initial spike and then the pullback. So, but it is good to go over just so investors have an idea of what's going on. So thank you for that. So, if we look a little bit closer to home, I think a lot of people are also focusing on the Fed. So, still fighting inflation. It looks like we're going toward a higher for longer strategy there. But there's a lot of concerns about whether the Fed could cause a recession or break something even bigger. So, I'm curious to know what you think is next from the Fed. We do have it coming up later this year, pretty soon.
So, I mean, the US CPI numbers came out just a few days ago. The numbers for September were up 0.4% for the month. It was a 3.7% inflation rate for the 12 months ending September. And that was actually the same as it was in August on the same pace. So, really, what's interesting about that is that really that's still double or nearly double the Fed's 2% target. The Fed's going to have a tough time walking back from, I believe, anyways, unless other things come into play. But things, even with this breakout of war, inflation's remaining quite high, and consumer spending, that's something we're going to have to see how that plays out. But I've been hearing that in certain sectors, especially, consumers are continuing to spend things like travel, entertainment, and so on, and willing to spend even more for in cases like where they are willing to spend more on items that are perhaps better for the economy, things that are sustainable, that kind of thing. They're really actually willing to pay a premium on these things. So in some areas, spending is holding up. We know that employment is holding up, and so the Fed really is between a rock and a hard place. It's going to be hard for them to back down from maintaining these high rates. I think that November, at least in my view, is likely to see a quarter basis point rate hike. 25 basis point rate hike, and anything's on the table for December, but I'd expect that for November, especially with these kinds of inflation rates. If you look at their personal consumption expenditure index, which is the Fed's favored measure of inflation, that's actually above 4%. So you've got the CPI, you've got the PCE, both somewhere around 4%, and again, double their target. So they really, I feel, have very little choice but to keep talking tough, raise at least 1 to 2 more times. And I do think the odds are pretty high that's going to end up breaking something. So we can talk about that a little bit as well in terms of where that may lead. But I think that's on the table too.
Right. And, with all of those factors in mind, I was going to ask you your outlook for the US dollar because when we spoke last, I think back in March, you mentioned if you want to know where silver is going in terms of the price, look first to the US dollar.
Yeah. So, I mean, and that has continued to play out. The dollar rose just in the last sort of few months. The dollar index rose to about 107. We've seen it come off a little bit in the last few days. My feeling is that, and I think a lot of that is driven by the rates by interest rates, which is the Fed raising rates makes rates being higher makes the dollar attractive. It also, of course, hurts especially longer term treasuries, which in some ways makes them attractive, but it especially makes short term treasuries attractive because you can now get a 5% yield on, a 1 month, 3 month, even a 1 year treasury. So why would investors be looking at stocks? Why would they be looking at longer term bonds? Why would they be looking at precious metals? They can get a good yield, not take risk. So the higher rates certainly makes for the stronger dollar, and it makes for headwinds on precious metals. So we saw the dollar rise, we saw silver come off somewhat, same with gold. And it's been in the last sort of week because of the conflict in the Middle East that we've seen a bottom really set itself, at least a near-term bottom or a recent bottom set itself in both the gold and silver prices, and they've really actually kind of taken off from there. I think that medium term, we may have seen at least a shorter term peak in the dollar at 107 in the dollar index. I think we may have seen the sell off in longer term treasuries also end and start to reverse. I'm not convinced by any means that it's a longer term trend, but I think we're going to get a counter trend rally in treasuries, and we're going to get a counter trend sell off in the dollar in sort of the next weeks and months. That could easily be a tailwind for precious metals.
Right. I was going to ask you about some of that turmoil in the bond market. So I think that covers what's going on there. If we go back to, that idea of the Fed breaking something, I just want to touch a little bit more on that because I hear that a lot, something's going to get broken. And is there anything else you can say? Because it always sounds quite vague, but then it is really hard to see these things coming. Like you just don't know.
Well, exactly. The best example is what happened with the British gilts back in the fall last year, almost a year ago, and then the U.S. banking crisis. There where we had four banks go under. This was around March, late March, I believe, this year. That felt like it came out of the blue, somewhat of a black swan. And so, if I had to make a guess in terms of what the Fed was going to break, like you said, very much you're right, Charlotte. These things are impossible to know in advance, and that's pretty much the definition of a black swan. My best guess would be that the banking crisis is just not over. The banks are struggling. I read something just recently, some statistic that it's the first time in something like 20 or 30 years that we've had, I believe it's a quarterly period in the U.S. where deposits have actually shrunk in U.S. banks. That's practically unheard of, and it's in part because they can't keep up with treasuries. Treasuries paying 5% means money market funds are really attractive for investors. Why would they want to give their money to a bank and deposit their money there when they can do better elsewhere? It's perfectly safe, if not safer. They probably feel safer. So the banks really are struggling, and they hold a lot of these longer term treasuries that have themselves been suffering because of higher rates. So those treasuries have gotten sold down. Yes, the Fed did step in for the regional banks and picked up those treasuries, but the Fed's going to have or could be pushed against a wall at some point too. And if a banking crisis got big enough, I'm not sure that they would step in and save the entire market. I believe it's just too big. So that would be one of the places I would point to as perhaps a more likely higher risk issue.
Okay, thanks for doing a little bit of speculating on that. I know it's a little bit of an unfair question to ask you to essentially
That's
predict
fine.
a black
We
swan.
deal with that stuff all.
Yeah.
We deal with that stuff all the time.
Yes, yes. So these are issues that silver investors should be paying attention to, but I also want to look at supply and demand dynamics. So again, toward the beginning of the year, we were talking about the Silver Institute's predictions for a big silver deficit this year, I think of about 140 million ounces. So we are approaching the end of the year. I wonder if we know how that's shaping up. Is that still looking to be the case? What are you seeing there?
So the Silver Institute actually has an annual, I guess, mid-year update, which they do in November. That is coming up in the next several weeks, in about a month or so. And I believe that's when they tend to update things and revise. I believe that they're going to revise upwards this forecast deficit. They did say around 140 million ounces for 2023. I think it's going to be there. They may come in around, my guess would be around 160 million ounces. And I think by the time we get to next year and the final numbers are in, it'll probably be closer to about 180 million ounces. So a lot of that is being driven by solar. Solar has just been going wild in terms of new manufacturing capacity. China dominates this area at about 80% of global manufacturing capacity. But if you look at the numbers over the last few years, 2021 saw something like 55% increase in solar panel manufacturing capacity. 2022 saw the same 55% increase. The forecast for 2023 is, I think it's 28 or so percent, and by mid-year this year we were already at 18. So if that pace continues, we'll be north of 35%. So it's just incredible because what's driving it is one, mandated pushes by governments, but two, the costs have come down so much that it's becoming cheaper to add power capacity from solar than it is to go with the traditional things like coal or natural gas. So you have the International Energy Agency that now forecasts that by 2027, so just 4 years or 3 years from now, solar is going to surpass both coal and natural gas as the world's largest supplier of electricity. So that's a really really big push for solar. And so if your viewers don't know, solar is a huge consumer of silver because of its conductivity, its reflectivity. It has the highest degree of both of those of any metal. And so solar consumes about 12% of the world's annual supply of silver. Probably this year, we're going to look at it consuming closer to about 14%, maybe even higher. So solar is really the gorilla I should say, sorry, the elephant in the room, to use the right expression. And so with that, I think that we cannot underestimate what is happening. You cannot ignore what's happening in the solar sector when it comes to the silver market. It really is a huge impact on demand for silver.
That's very interesting. So that gives us a good look at what's going on in terms of industrial demand for silver. If we look over to the investment side, how are we looking in terms of the institutional and retail investors? I know you talked a little bit about sentiment toward the beginning of this conversation.
Yeah. So we've seen actually that has been a bit weaker. Last year was a blowout year, 333 million ounces out of a 1 billion ounce market. So that's like a third went to silver investment demand. I'm not sure we're going to be able to hold that pace this year. However, with silver prices being, I'm going to say, not weak, but sort of mediocre, that can, to some extent, attract the attention of bargain buyers. So they could very well decide, that they find silver prices attractive and to continue to buy. What we have seen, though, is that silver ETFs have seen their holdings of silver drop off in the last several months. So that's typically where you do get retail and institutional, but that's typically where institutionals play because they can get access to large amounts and be very nimble in and out of the market. That's where we've seen supplies drop. So you could actually take that two ways. Does it mean that there's more selling happening and therefore those ETFs have to shed those silver ounces to keep the NAV balanced in their units? Or is it because you've got some bigger players that are taking delivery? I believe it's both. I believe that some of the bigger players who want physical silver are doing it by buying ETFs that are silver backed. And if they buy enough of, because the minimums can be quite high, several $100,000 and up to take delivery, that they can do that. They can stand for delivery and get access to large amounts of silver that way and perhaps not really impact the market too much, which is ideal for them, of course, because they don't want to affect the price too dramatically.
All right. And, my impression with silver is that it's more of a demand side story than supply side. But I did want to ask just briefly, are there any supply side stories that you think people should be paying attention to?
Absolutely. The two largest suppliers of silver are Mexico and Peru. Peru just came out with numbers showing that their supply has fallen to 20-year lows. Mexico, in the last quarter or so, is down 19%, the lowest quarterly drop in something like 4 years. And Mexico is by far the largest supplier worldwide of silver, 170 million ounces or so. A good chunk of that, to be fair, is related to Newmont's mine, the Penasquito mine that has been dealing with a strike. I believe that was just resolved. So that will help going forward. But we're still talking about over 30 million ounces of silver from that single mine. So I think that's had a big impact. And that's going to certainly dent silver supply from mining for 2023, because that mine was offline probably for about 3 or 4 months. So given that the world's two largest silver supplying countries are seeing multi-year lows in supply, and the prospects for new silver mines to come on stream, to one, be discovered, be approved, financed, built, and then come on stream. We're talking 10 to 15 years these days. And so there was an interesting bit of research by Bank of America going back about a year or so, and they looked out into the future in terms of where they saw different metals in terms of supply demand, sorry, surplus deficit characteristics, and they saw silver as having the biggest challenge going out to about 2030 of all base and industrial metals. And we've seen that mined silver, if you go back over the last 10 years, the forecast mine supply for this year is the same as it was back in 2013. So it will have not changed in 10 years, despite way higher demand for the metal. So it's clear that mining cannot keep up with the demand for silver.
Okay, so I should not discount the supply side part of the silver story. Okay, that's very helpful.
Absolutely. That would be unwise.
All right, all right. Good to go over that. And so I think now we've got to put all this together when it comes to prices. And I remember at the beginning of the year, you had told us in the second half of 2023, we'll get a stronger silver price, most likely, not necessarily in the first part of the second half of the year, but maybe toward the time that we're in right now. So are you still feeling the same? How is it looking for prices?
Yeah, I mean, I think that there is a decent chance that we're going to see higher silver, probably not quite as high as I was expecting earlier in the year when we spoke back in March or so. But I do think that we have the potential for strength. One of the reasons, as we talked about before, I think that in the sort of near term, the dollar may have topped. I think that that's going to help silver with a tailwind. Certainly, if we see a continued or escalation with the conflict in the Middle East, that could be another bit of support for silver. And then balanced with that, of course, is if we have the Fed continuing to hike rates. So that will, I would say, sort of push back the timeline in terms of when we could see silver start to climb. I would expect that in the first couple of quarters of next year is when we have sort of a better chance of seeing silver assert itself more and have seasonality start to kick in and get that to push the market towards a rally more easily.
Okay, so we'll look toward that point in time. I'm sure we'll catch up with you then. And so I want to ask you as well about your portfolio. So I'm wondering, when it comes to the silver companies, do you have your portfolio set up the way you want it? Have you made changes over the course of this year? Are you on the hunt for opportunities? How is that looking?
So actually, I did make a change. I'm going to keep this for subscribers, but they know what I'm talking about. Um, there was one company that has performed exceedingly well since the stock was added earlier in the year. Just recently, it was up about 180%. And so I took and told subscribers to take partial profits. I took 1/3 profits on that holding. It's really been a standout performer. And I think that that's likely to continue. So that's really the only change I've made recently. I'm being patient with the rest of my holdings and continuing to do research. And there are some attractive names out there. They've gotten, unfortunately, some of them have gotten, well, in some ways, if you don't own them yet, they've gotten more attractive. The ones that you do own, it's unfortunate that they've gotten more attractive. But that being said, I think that patience will absolutely be rewarded in this market. So it's an excellent time for people to be doing their research, to start nibbling on some of these companies. And there are some really tremendous opportunities out there. So it's time to really get your homework done and start participating.
Right. So people still have time. They can still do that research and get in. It's one benefit, I guess, of the price not quite moving yet. So
Exactly.
yeah. And all right. So on another company note, I wanted to ask you about this news from First Majestic Silver, I saw that they are looking to open their own mint, and I thought that was a pretty interesting move. So, for someone who follows the silver space closely, I wanted to ask you, does that make sense to you? What are your thoughts on that?
So to me, it makes perfect sense because they will sell an ounce for the spot price, let's say right now at around $22 or so. But that ounce, depending on the type of coin it becomes, ends up getting sold. And this is not historically not typical, but premiums are still at 30, 40, 50% and above in some cases. And a lot of that gets captured by other intermediaries, like the mints themselves, by different processors who take the metal, prepare blanks, supply those to the mint. So a lot of that gets captured by these intermediaries. I think it's a smart move. I think that First Majestic will be able to capture a lot more of that premium. My feeling is that premiums are going to stay high. Actually, they've been abnormally high, but that's been the case for nearly, I'm going to say, 3 years or so now. Uh, Before even COVID hit, they were high, and then they just absolutely exploded. They've dialed back, they've moved back up, they have dialed back again, and then back up, but they've stayed beyond what's normal, which is around 12 to 15% typically for silver above spot. We're still double and more of that. And so I think that if you have the ability to open your own mint, I'd love to own one. That makes sense for them. Sure, why not? They're going to capture a lot of that. They produce a lot of silver. There are different options. Mining companies, and I've talked to some recently that have talked about the idea of actually sitting on a good chunk of their production. And this is an interesting topic because think about what precious metals are. They are supposed to be, at least in part or large part, a hedge against inflation. So what do? They produce these hedges, right? The gold, the silver, then they turn around, sell it for cash, and then have cash, and then need to do something with that cash. Well, that cash is subject to inflation. Yet if you produce these metals and then you sit on them to the extent that you can, I'm not saying to do that with all of your profits naturally, because you need to maintain your capital expenditures, you want to expand and so on, maintenance, etc. But with a portion at least of your cash, you are hedging yourself in the best way that is the entire thesis of and the entire purpose of your company. So these are the kinds of things that I see companies talking about doing, getting quite serious about doing. I think we're going to see that probably more and more, especially if you get one higher profile company doing that and committing to it. I think we're going to see that more from others, and it's very logical. You've de-risked those ounces. They will sit on your balance sheet. They become a hedge versus cash, the best type of hedge that we know that this industry is meant to be. And so those ounces will just continue to gain value, and versus taking the cash and putting it at risk, looking for more ounces, looking to build new mines, that kind of thing. So again, not that it's an all or nothing kind of strategy, but it is very logical. And I hope we see it happen. And I hope we see a lot of companies start to adopt that approach.
Yeah, that would be very interesting to see. So keep an eye on that. And I have one small follow-up question there on the premiums. So you mentioned they are high, but they've been high for quite a few years now at this point. So can you talk a little bit about why that is? What do we need to see them come down?
Wow, that's a tough one. I'll be honest, because I get different feedback from different participants in the sector. Some distributors, for example, will say that they can't get supply. Others will say that they can get supply, that they just continue to charge the premiums because the market's bearing it. Really, that is the kind of feedback that I'm getting. And so I do believe that supply has a good part, is a good part of the explanation for that. We know that the U.S. Mint, for example, is way down on their silver eco production. I believe that that's a difficulty that they have in terms of getting product that they can use to produce the coin with the blanks. And so the market is tight. It's just quite simply tight. And I think that if you look at what mine supply looks like, if you look at what recycling looks like, and if you look like what the demand for outlook is, I have a hard time seeing that change dramatically anytime soon. I think that to go back to the normal premiums of sort of 12 to 15% on silver, I'm not sure we're going to see that for quite some time yet. It could be probably several years, maybe not even until the end of this secular bull market.
Okay, very interesting. And I ask because if you've been buying silver all along, you'll know what's going on there. But for new people who come in, maybe they have a little bit of sticker shock when they go to the store, and it's like, oh
That's
my
true.
goodness.
That's a great point.
Okay. So I think that wraps up everything I had for you. This was a really good discussion on what's going on in the market. But any final thoughts you would add for investors? We're heading toward the end of the year gradually. Anything else you would add?
What I would add is, I think that a lot of the attendees at the Silver Symposium, they got it. One of the things I kind of like to repeat is that we can be our own worst enemies as investors. And I think that recency bias is a big one. If you look at what's happened over the past 40 years, you had around the end of the 70s, so around 1980 or so, early 80s, we had the end of the precious metals bull market. And then you had the start of the long-term 40-year, arguably a 40-year stock and bond bull market. Well, that's already essentially nearly double what a typical bull market is. And so, but that was wonderful. And for those invested in those assets. And it's also, I'm going to say, not misleading, but maybe a little bit, because you've got an entire generation that's really seen nothing else. And it's hard for them to have their minds open enough to be willing to accept that these things do end, and they do. Just the way the precious metals bull market ended in the end of the 1970s, the stock and the bond bull markets are more than likely essentially over at this point. And so, but yet the transition, so when you had the end of the precious metals bull market and the start of the stock and bond bull markets around the early 80s, these were what I call messy transitions. These transitions don't happen overnight. They're not obvious. They're not always clear to everyone. And they can take a couple of years to play out. And that was the case with all three, precious metals, with bonds, and with stocks. So precious metals were at their peak. Bonds and stocks were at their troughs. But it was really not that obvious. And you had kind of these wild swings for a while. And it was easy to kind of get people who became bulls perhaps in those markets to get thrown off the bull because they were shaken. And you'd get these run-ups, you'd get these sell-offs, and then ultimately the troughs showed themselves, proved themselves, and you had the beginnings of these long bull markets. And I think that we are in a similar period in the precious metals, and I think that people really do need to realize that stocks and bonds have had their time. 40 years is a heck of a long time. They need to realize that we're in a new age. It's an inflation age, unfortunately, and to look for the ideal ways to play that. Commodities and precious metals are ideal in this kind of an environment. And so don't be too influenced by the recent past. The future is going to be considerably different from what people have experienced recently.
Okay. I think that's a great place to wrap it up. I have to say, I don't like the idea of an inflation age, but that's all right. We'll get through it. Thank you so much for coming on to talk about what's going on in the markets.
It was a pleasure, Charlotte. Thanks for having me.
Thank you again. And once again, I'm Charlotte McLeod with investingnews.com. This is Peter Krauth with Silver Stock Investor and author of The Great Silver Bull. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.